Palantir Technology stock is trading around $178 right now after an insane run from just $10 at its 2020 IPO. That's already an 17x return in about 4 years. And here's the thing. Some analysts are throwing out price targets between $190 and $255. Could this stock still have room to run? But here's what you need to know. Is this continued AI hype, or is Palantir actually the real deal? Today we're breaking down everything about PLTR, the business model, the explosive growth that just happened in 2025, the risks Wall Street is debating, and exactly how I'd approach this stock if I were considering it today. By the end of this video, you'll know whether Palantir deserves a spot in your portfolio at current levels, or if you should wait for a better entry. Let's dive in. Section 1. What is Palantir? First, let's get clear on what Palantir actually does, because this isn't your typical tech company. Palantir was co-founded in 2003 by Peter Thiel, yes, the PayPal billionaire, along with a team of engineers who wanted to build software that could connect the dots in massive amounts of data. Think of it as giving organizations superhuman intelligence. They have two flagship platforms. Gotham is built for government and defense. We're talking CIA, FBI, Department of Defense. This software has been involved in major operations, tracks threat networks, and manages complex military logistics. Basically, if there's a critical national security mission, Gotham is likely involved. Foundry is the commercial version for businesses, hospitals, oil companies, manufacturers. It helps them optimize supply chains, predict equipment failures, and make smarter data-driven decisions. Now, here's what's important. About 55% of Palantir's revenue still comes from government contracts, but that commercial side, that's where the explosive growth is happening right now. The company went public on September 30th, 2020 through a direct listing at around $10 per share. Fast forward to today, and we're looking at $178. That's over a 17x return in just over 4 years. And the question everyone's asking is, can it continue? Section 2. The 2025 growth explosion. So why did Palantir absolutely explode in 2025? 3 massive catalysts drove unprecedented growth. Catalyst number 1, the AI platform revolution, AIP. In 2023, Palantir launched AIP, the artificial intelligence platform. Think of it as ChatGPT specifically designed for enterprises with all their proprietary data, but way more powerful and secure. Here's the genius part. Palantir offers free AI boot camps where they bring in potential customers and show them exactly what AIP can do with their actual data. Not theoretical demos, real results in days. The conversion rate? 70%. And in Q3 2025, the U.S. commercial business grew an absolutely insane 121% year over year. Let me repeat that. 121% growth for a company that's already passed $4 billion in annual revenue. That's extraordinary. Catalyst number 2, record-breaking Q3 2025 results. In November 2025, Palantir reported Q3 results that CEO Alex Karp called arguably the best any software company has ever delivered. The numbers speak for themselves. Total revenue, $1.18 billion, up 63% year over year. U.S. commercial revenue up 121% year over year. Government revenue up 52% year over year. Operating margin 51%, an all-time high. Rule of 40 score 114%, meaning they're combining massive growth with profitability. For 2025, they guided to over $4.4 billion in full-year revenue, representing 53% annual growth. Healthcare companies, manufacturers, energy firms, Fortune 500 companies are rapidly deploying AIP at enterprise scale, not just as pilots. Catalyst number 3, massive government contracts.
In August 2025, the U.S. Army announced they're consolidating 75 different contracts into a single 10-year deal with Palantir worth $10 billion. That's right, $10 billion over 10 years with just one agency. Then, in September, they landed a £1.5 billion defense deal with the UK government. These aren't one-time deals. They're multi-year partnerships that provide incredibly predictable recurring revenue. And with government AI spending projected to exceed $100 billion in coming years, Palantir is positioned as the dominant player. Section 3. Financials and profitability. Now let's talk money, because valuations matter, especially at these prices. Palantir achieved consistent GAAP profitability throughout 2025, with profit margins running around 30 to 40% adjusted. For Q3 2025, they reported EPS of 21 cents, beating analyst estimates of 17 cents. The balance sheet is fortress-level strong, over $6 billion in cash and short-term treasuries with essentially zero debt. They're generating about $2 billion in annual free cash flow now. For full year 2025, revenue should come in around $4.4 billion. Looking ahead to 2026, analysts are projecting revenue around $6.5 to $6 billion, with EPS potentially reaching 56 to 70 cents for the full year. But here's the critical issue. At $178 per share, Palantir is trading at about 35 to 40 times sales and a forward PE of about 175. For context, most software companies trade at 5 to 15 times sales. The market is pricing in perfection.
Okay, reality check time. Risk number 1, extreme valuation. At 35-40x sales and 175x forward earnings, this is one of the most expensive stocks in all of software. Even if the growth story plays out perfectly, there's limited room for error. Any miss or slowdown could trigger a sharp sell-off. In fact, the stock already pulled back from its November high of $207. Risk number 2, institutional selling. In late 2025, major institutions like JP Morgan cut their positions by over 32%, and T. Rowe Price reduced by 24%. Institutional ownership is only 56%. Smart money has been taking profits. Risk number 3, government concentration. While improving, over half the revenue still comes from government contracts. Budget delays, political changes, or contract disputes could significantly impact results. Risk number 4, competitive intensifying. Microsoft, Google, AWS, they all want enterprise AI. Palantir's advantage is relationships and specialization, but the competitive moat could narrow. Risk number 5, stock-based compensation. Palantir still pays employees heavily in stock, which dilutes shareholders, though this has improved. Wall Street analysts have a consensus hold rating with only 3 buy ratings versus 11 holds and 2 sells. The median price target is around $190, just 7% upside from current levels. So here's how I'd think about Palantir at current prices. And remember, this isn't financial advice, just my personal framework. The reality check. At $178, Palantir is no longer the undiscovered growth stock it was at $10, $20, or even $45. A 5x from here means a $900 stock and a market cap approaching $2 trillion. That's bigger than Google. Is that impossible? No, but it requires flawless execution for years. If I were building a position, I'd wait for pullbacks to 140 to 160 range before adding significantly. Current levels might work for small positions if you have a 3 to 5 year time horizon. I'd never put more than 3 to 5% of my portfolio here given the valuation risk. Set a stop loss around $140. If it breaks that level on weakness, reassess. Price targets for 2026, conservative $190 to $200, matching analyst consensus. Bull case, $240 to $280 if growth accelerates further. Bear case, $120 to $140 if there's any disappointment or market rotation. Position sizing example, if you're investing $10,000 total, maybe $300 to $500 in PLTR maximum with the rest in diversified index funds. This is high-risk, high-reward territory.
Time horizon: if you buy this stock, you're signing up for volatility and need at least a 3 to 5 year holding period. Don't chase it on green days or panic sell on red ones. So there you have it, the complete, honest breakdown on Palantir in January 2026. This is a company executing at an incredibly high level with genuine AI leadership, but the valuation is pricing in years of perfect execution. What's your take? Are you buying at these levels, waiting for a pullback, or staying on the sidelines? Drop your honest thoughts in the comments. I want to hear your strategy. If this deep dive helped you think through the investment more clearly, smash that like button and subscribe for more honest stock breakdowns. No hype, just real analysis to help you make smarter investing decisions. Thanks for watching, and I'll see you in the next one.